Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, April 6, 2017. Saw a little bit of mind games being played today. I actually warned about that in the morning notes that we give them a chance to kind of rally it a little bit. They have the uncertainty of the jobs numbers tomorrow, and I thought that if we got any kind of bounce, that we were going to see some shorts piling in, and from there they would probably use them to squeeze the indexes higher. We didn't. We had a pretty decent little run going, and it went right into the resistance area that I had mentioned between the 2360 and the 2367 area. So that held it down, and from there we had a little bit of a pullback. But really, the main squeeze came from the small caps. I saw that coming from a mile away, and believe it or not, they still got me a little bit. I was waiting patiently watching it, and it went into resistance and then dropped down, and I jumped on it when it was up like something 85 cents or something. So I waited patiently on it, but from at the close they squeezed some shorts out and ended up up $1.25. So we knew that today was the day that they were going to try to scare some people heading into the jobs numbers. Tomorrow, if they're good and they pop it up, it's the same. Really, I'm looking at the same type of roadmap. You want to use the strength to short until the bulls can push the S&P above the 23, say 85 level, and even if they do that, they still have the 2390 as resistance. But they have a lot of work to do, and I still think we're in the beginning stages of that wave C down, and that's the way I'm going to trade it until it's proven wrong. So taking a quick look at just our little color coded chart here, daily overbought 60. We're neutral, but I have kind of like a beige red because it's heading down. So it's coming from oversold levels and it's in the neutral, but it's heading down. So that's a little bit on the bearish side. 15-minute, we're oversold-ish. We bounced a little bit, but we're still in the oversold levels of things. And the 5-minute, we're neutral, but the divergences, the 5-minute, that all these played out already when we had that extra little drop today at the open, and from that we actually saw bullish divergences on the 5-minute chart, and that's why it's tough to trade the short-term charts, just because they're going to flip from buy to sell a lot. But the way you want to look at it is, what are they within, say, the bigger trends? So the 5-minute had the bullish divergences. We got a bounce, and it ran into some of the moving averages on the 15-minute, and that's what held it down. But the bearish divergences that we had yesterday, going into yesterday, they played out right now, and what we're looking for is there's a neutral. I'll show you this on the charts too, but this is neutral because we had a little bit of a bounce, but we don't have bullish divergences, so that's leaving the door open for the lows that we had today to be taken out. So we're on a sell on the 5. We're on a buy on the 15, but it's heading down about the cross. Sell on the 60, and the daily is going to be a buy, and nothing's really changed as far as the momentum lines. So if we take a look at our regular charts here, let's start with the 5-minute chart, and this is what I'm talking about, where you can see we made the low here, and then from here today, when we made the second low, this gave us a little bit of a bullish divergence, and from there we were oversold, and we got a nice bounce right into the 50% retracement, which is what I was saying, between the 2360 and the 2367. So it made it right in the middle, and then from there we came back down again. So if you use those numbers, you got a pretty good entry. And like I said, if they rally it tomorrow, then you just wait for the next pivots to short. And like I said, I believe that these lows are getting taken out, and I believe these lows are going to be taken out. So the 15-minute, this is where I'm saying that we're neutral, because today's lows didn't produce any bullish divergences. Now, if we have a move down tomorrow, either we're going to have bullish divergences, or this one's going to take out this low here, which I would kind of like, because if it did that, then we're going to be testing some of the support areas that I'm looking. But you can see the moving average right here, it's about, it's starting to head down here, and this is what held the S&P from continuing to rally, and we saw some selling, but towards the end of the day, some shorts covered, and I think that was primarily because they didn't want to, roll the dice heading into the jobs numbers tomorrow. So, 60-minute chart, this is the pattern that's been in play. I'm leaving it like this until it's proved wrong. It really, they have to take out these levels here to be able to say that this is not an ABC move, and most likely we're making a wave five. But right now, like, I still think we're heading lower. Even if they decide that they're going to try to pop the markets tomorrow after the jobs numbers, I would use it to fade it, because by day's end, we could be, if they open with a nice gap up, we could be finishing the day red again. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.